All right. What is up, everybody? Welcome back to another weekend market close update, episode two. We've gotten quite a bit up, quite a bit of morning news out, but we're just going to do a weekend. It has been busy, so I do apologize, everyone. Been running my companies, running my furniture store. It's just been absolutely chaotic, and I am pretty much wiped out at the end of this week. But I'm glad to have you guys in here, and this is kind of like an open forum Q&A. If you want to come in, ask your questions, join in live, either put them in the chat or just come on live and we'll talk about it. But welcome back, everybody. Hit that like and subscribe button. As you know, this video is always supported by you guys, and really appreciate all your guys' effort and everything and joining in for us. Also, if you guys could, give us some support on our TikTok channel, new one, Simply Investing 60. You can join me there. Unfortunately, I got banned on TikTok. So you gotta have to help me rebuild again, and we'll bring TikTok viewers back on our lives. But we are live on every platform: Twitter, Facebook, X, or Twitch, X, and Rumble as well. If you want to catch the replays, they're on Rumble as well, or just go back on the channel, look up us up on YouTube, and check us out there. And a lot of crazy things going on that I kind of want to talk about. Some good topics too. I posted a few videos about it for you guys with talking about how we were the Gen Zers and everything, and budgeting and finance and adapting to where we're going in this world, what's happening on the economy, what's going on in real estate. And shout out to Crypto Dream for joining us in here. Also, go like and subscribe to his channel, one of our great supporters. He is getting close to that 500 mark, so let's help him get there and help him keep reaching new heights there. But he definitely has an interesting take on investing in crypto. And like I said, you have to listen to everybody, and the more people you listen to, the more information you have, the better you can invest. But here we go in at the close of markets. We got pretty much S&P down. We got the NASDAQ down a little bit. We got pretty much flat on the Dow. Now, these are all we're at all-time highs on everything. It's just astronomical. We're on all-time highs on everything. And what I want you guys to understand is that this is not sustainable. We're kind of like the candles burning brightest before it goes out. I hear all the same rhetoric with real estate talk, like this is going to be the best year. Don't miss out. The FOMO. I'm expecting a 20 to 25% correction in all markets, pretty much real estate, crypto, stocks, just the economy in general. I expect it to correct, and so far I've been right. Like I told you guys, we're going to have this relief rally from like Thanksgiving to about midway in January. About midway in January, we'll start to pull back. Here we are, we're pulling back, and you can go check my lives. I've been calling it for the last 3 months. Just saying, hey, it's coming. Unfortunately, Cody can't join us today because he is working right now. If you guys have been following us, he has his job as a manager at a convenience store, so he doesn't get off until about 8:30. But unfortunately, me with running a business is I kind of can set my own schedule and put aside some time when I need to. But I'm glad that you guys are in here for that. I also want to talk quickly about how we're going to talk about a little bit about crypto, what I'm investing in, what I'm building in, where do I see crypto markets in a little bit here. Let me just post this real quick here. But let's go over here quickly, talk about crypto. As you can see here, we're up 4%, up to 1.61 trillion. We're experiencing a little bit of a relief rally, only 58 billion in trade volume. We got Bitcoin back over 41,000, almost 42,000, getting a nice little spurt up. But keep in mind, we got a lot of people that are still selling BlackRock, Grayscale, and of course the federal government is selling the coins from Silk Road, the 130 million dollars worth of Bitcoin from Silk Road. All of that's getting liquidated soon. Even though the Silk Road transaction will happen off market, under the counter, pretty much. So that way it doesn't affect the markets as a whole. So keep that in mind. But there will be Bitcoin circulating. The prices will drop. People will start to liquidate. We're starting to fall off in the debt markets and everything with consumer debts, as a lot of people are or more and more people are not paying those off. So we had kind of a good Christmas, but we're here and now we're experiencing the effects of it where people are no longer buying even the essentials to survive, which is a very, 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 very bad thing. And we want to make sure that that's not a good way to keep this economy going. So just be warned. And we got some craziness going on in the car markets. We got Vroom stopping all online sales and is moving to just financing, which spells the doom and gloom for that. We should expect more layoffs to come from that sector. I do see Carvana getting a little boost from Vroom, kind of shutting down their car side purchasing services online. However, once again, it's gonna hurt the markets because now we got all those trucks going back on the market. They got all their vehicles getting liquidated, and so it's gonna cause even more chaos in the car markets. And we also got dealerships going bust. We had a few here in Northwest Arkansas bite the dust, um, and they're still building new dealerships, which is crazy. So that I have a funny feeling that we are going to see kind of like a crisis mode happen in that market. I do expect to see good deals on cars and capital if you're running a business, like if you got a handyman company or landscaping, moving, logistics, you need trucks, you need vehicles, you need service vehicles. You're probably going to get a good price in the next coming months because there's going to be a lot of liquidations over there and a lot of companies going bust. Already the small guys are getting constrained out. So now the next step is the big guys are going to start falling because I don't see a lot of new car tags on the road anymore, like I did a couple of years ago. And with that finally said, we have the Fed possibly not raising interest rates, where they're pushing it back until March. But however, they are having a meeting next week, so just keep that in mind. They're having kind of like a private meeting next week, so just to keep that in mind there, that's still out there in the wind. However, my opinion is that they should raise rates, break the economy now, feel the hurt now rather than feel the hurt later, because the hurt later is going to be a lot worse because we're kind of falling without a parachute right now. And or I get no, it's not a good analogy. We're more like a frog in a boiling pot of water. The economy's starting to boil, and we're kind of the frog in there, still saying, "Oh, it's okay. It's nothing. People are still buying. It's still a good time." I think this is kind of like the last year. This is going to be 2024 is going to be very synonymous to 2007, where you start seeing cracks, you start seeing um, craziness going on in the markets. The credit markets are going to be kaput. I have a feeling like BlackRock, Vanguard, Fidelity are going to start liquidating the family home rentals that they purchased over the past years, and they're going to liquidate them at a loss. And that's also going to cause people's mortgages to go underwater and kind of start the snowball effect running. So just be aware of that's what's going on in the markets right now. And even in the markets here, I mean, S&P 500 is at an all-time high. I expect that to correct down. The economy is still pretty much being held up by the tech sector, just held up by it. I mean, they're still making products, they're still making money, but overall, the whole markets were experiencing upward turns mainly because inflation went up, revenues went up, so the physical number of profit went up, but in actuality, the percentage of profit stayed the same. And so we're kind of getting like a faux sense of security off of that. And unfortunately, we're going to head down. And also keep in mind, we got the issues in the trucking industry, truckers leaving by like 5,500 truckers per month are leaving the industry. We're not replacing them. We got California changing the rules on trucking and pushing out a lot of people. So, and a lot of people don't want to do business over there anymore. So now the food can't get transported out. We're having harder times getting food and essential goods transported around the country. I have a feeling that we're going to go back to the way it was when I was growing up, where things were only seasonal. We didn't have like factory farming can't survive without trucking. And to keep the prices low, they were keeping the truckers pay low, and now nobody wants to do it, and so now the market's correcting. Unfortunately, there's going to be a lot of pain with that correction, and a lot of big companies are going to go out bust. If my big bet on that is Cisco Systems, which is a food distribution system. not Cisco, the CISCO, but the CYSCO food systems. They're going to feel the hurt, and they might suffer a bankruptcy in next coming years, because as small businesses go out of business, their big businesses aren't going to function as well as they think that they serve, because they're going to go out of business as most people tighten up their budget, stop spending on bullshit, and they're going to start doing a lot of do-it-yourself stuff, such as like cooking and providing their own food. They might even start growing their own food at this point. So just keep that in mind, especially down here in the South. A lot of people just want to start going deer hunting. One deer can last a family of four for a month. So just keep that in mind there. Keep that in mind as you're investing. However, it's still a good time. Better to be in the market than to not be in the market. It's hard as hell to time the market. So it's better just to dollar cost average when it makes sense. However, like you guys, I'm not dollar cost averaging much. I'm doing just a little bit here and there. I'm waiting for that big drop so I can start really dollar cost averaging in and getting everything at a good price. Well, excuse me. So, and also for you guys, I got the link in the description. If you guys can share, spread the news, bring people in. Love to hear your questions and everything on the market. What's your thoughts? Send them over. I'll be happy to do it. We got a few people on Twitch. We got a few people on Facebook and Twitter, and we got quite a few little guys on YouTube there. So really appreciate you guys joining in. But overall, this market's kind of crazy. Like, I'm not doing a lot of expanding. I'm not buying any real estate. I'm closing out the deal I have in Dallas on my warehouse that I'm building down there. That's kind of all set and done. All the payments going through. We got the mortgage set and everything. That warehouse should open up in June. And my last warehouse that's being built is here locally, and that should be done in springtime of next year. But I'm not buying any real estate. I'm not doing anything. I have 247 doors, and that's it. There's a lot of good properties, but I'm just not ready to spend the money. I'm going to wait for the opportunity to short sell. And I'm telling you guys, the opportunity to short sell is going to come really quick, where you can get real estate like 25 cents on the dollar. Like, it's going to be phenomenal on what you could get these properties at, because a lot of these loans, a lot of these mortgages, a lot of these corporate loans are going to go bust. I can tell you that right now. We built too much. And the sign that we built too much is that we got way too many damn car washes. And just like in 2006, I noticed there's a shit ton of car washes. It was just really weird. And now we're back to the same thing. So I think the same collapse is going to happen. However, I don't think it's going to be as bad as the financial crisis of 2008. I think it's going to be bad, but it's not going to be that bad. So if you have a job, I would not think about quitting it right now, because layoffs are going to keep happening. They are I just did some post on the IRS and the federal and the FBI are cracking down on the PPP loan frauds and financial fraud schemes in general, banking schemes and everything else. I've been seeing you're going to see a lot more people getting locked up for it. You're going to see a lot more people, unfortunately, ruining their lives over like 50, 60, 70, or $100,000 that they scammed out of a bank or the federal government. And they're going to go back. They're going to do 10 years. They're going to have to pay that money back. And they don't have the money. They spent it on a lot of bullshit. So let's keep that in mind. However, I do say that my next biggest thing is, when we do have this big economic collapse that I'm thinking of, that I'm anticipating, my biggest thing that I'm sidelining for is buying up my competition. Because as the economy shrinks down, my competitors will shrink down, and I'll be able to buy them up at a discount, as those owners will want out as quickly as possible. And I will definitely swoop in and buy in. I already did it with the delivery company. It took a good 5 years to kind of like work and constrain them. And now I'm picking up their contracts as they go out of business, don't want to do it anymore, can't get the staff, can't maintain, because they couldn't compete on the level of service I had, which, that's just how I run business. I kind of circle around like a boa constrictor in the market and just keep constricting everybody until they fight among themselves and knock each other out. But with that being said, like, I'm not even putting in more money in stock market. I already did all that in the beginning of the year. I have my portfolio set up. Let me see if I can pull up my portfolio right here. I just want to see what percentage it is of my net worth right now. Okay, so my crypto portfolio is 14% of my net worth. My stocks are 13%, and of course my what I call label as my reserve fund, which is a small Roth IRA of 100 and something $1,000. I have a Wealthfront and Betterment over 1 million, so that totals about 13%. You count my assets from my property management and properties. We're looking at a pretty good sizable. I'm still in the 8 figures. I did take a significant dip because I was like, I think maybe like a year ago, when we last were the live a year ago, I was at like maybe 25 million, but I'm now down to 20 million on total valuation of all my assets. And we're probably going to go down some more. Like I said, we anticipate a 25% drop. So then I should experience another 5 million net loss on my total net worth. Just theoretical on there. But I'm also buying as I go. Like I told you guys before in one of my business, if you guys want to check out the Patreon, I have all the business videos up there. I don't focus on income. I focus more on just cash flow for myself. So I make sure I pay myself a salary off of my businesses. As you guys know, I have my property company, I have my furniture store, I have my moving company, and I own 33% of a construction company. And I get a salary out of every business. And the reason why I pay myself a salary is because it helps. Like if I go bust on everything, and when I'm 70, I have still contributed to Social Security. So I still do all that. It doesn't bother me much. And then I get my yearly dividends from all 4 companies, and then I put them aside. Although I got my 3 for the first 3 companies, the construction company I'll get in July is when we pay out those dividends on that company in July, because that'd be the full year of the business. But other than that, it's like construction. I anticipate that business to slow down tremendously. I'm anticipating a 10% increase in vacancy on my properties, because if people aren't able to pay their bills, I don't expect them to pay rent. I expect them to probably just pack up, move out, not renew leases, or unfortunately, if worse comes to worse, I will have to evict them. But I haven't had that because I'm always honest. If you tell me, hey, you're running on hard times, I'm not the type of person to kick you out right away. If you're running on hard times and you're honest with me and you're trying to build a game plan, I know it's going to take a couple months. Everyone logical knows it's going to take a couple months just to get back to zero, let alone get back to start paying off other things and catching up and being regular and on time. If you work with me, I'm not here to kick you out, because, like I said, unlike all these other idiots, I didn't over borrow to get the property, and you're paying for my lifestyle. That's not it. I do it so that way there's a consistent cash flow and there's a net asset value that my businesses can survive off of in a bad time. And most of the time, I got great tenants. A couple of them started reaching out to me saying, "Hey, they're running into trouble. They're experiencing some financial problems." I said, "No problem. Tell me what you can pay. Make sure you pay it on the day that you tell me that you're going to pay it. And I'm not going to start eviction process, especially if you're keeping my property in great shape. Yeah, I'm not going to kick you out as long as you're paying me something." That's where I tell people, if you're going to start real estate, get into renting out properties and everything else and owning those properties. You don't want to over leverage. You want to be about no more than 50% of that asset in leverage. So that way, if you have to liquidate, you're always in a profit. And if they don't pay, it doesn't hurt you that much. And I reserve 50% of my monthly rental income. So it just gets reserved. I keep that in reserve. It's in the interest bearing money market account. So that way, if there's trouble, we can pull from it, but it's also getting some money back for us. And it just kind of sits there. And I haven't had to touch from it. And so now it's up to the point where it can cover the properties of my businesses. God forbid we get this economy crash gets even worse than what it's looking like. But with that said, I don't really have nothing much else to talk about in the market news. Kind of hoping some Cody and or some of the other guys that help send me information would hop on. But it is what it is. I'm getting pretty tired. I was gonna do like 2 separate videos, but I don't think I have the energy to do a Q&A session for another 2 hours afterwards. Might have to wait till I get some rest and everything, because we're getting into flu season and I'm getting old. I know I don't look like it, but I'm getting old and I can definitely feel like I'm getting sick. It's getting easier for me to get sick. But with that said, guys, I really appreciate you guys joining in. Uh, there's not really much for me else to talk about on here. There's a lot of news going on in crypto, but the overall thing you got to know about crypto is we're going to experience a 25 to 30% drop. When it's going to happen, I have no idea. My best bet would happen right after the Bitcoin halving in May or June. It'll start to drop. I have a feeling because the tax season is coming up and the what I call the Andrew Tate effect, crypto is going to be staying pretty high. But I have a good feeling that if we don't experience an economic crash or correction in March or April, it will hit in October. And if it hits in October, it's going to last a lot longer. If it hits in March, then it's only going to last like a year or two, and then everything will be back to normal. But if it hits in October, all the economic crashes that hit in October took like 5 years to a decade to fix. And I know some of you guys out there, you might not have a decade to fix that. But unfortunately, that's how things go sometimes. But do appreciate you being in here. Appreciate you guys. Appreciate all the support. I love making these videos, especially hopefully I could be more awake for the next one. And we can actually get back to the morning market news for you guys. But really appreciate you guys joining in. Love all your support. Love all your questions. Check us out. Check out our videos. Like and subscribe. Hit up the Patreon if you want to get early access to the videos, and also to the Patreon exclusive content. But thank you guys. I'm gonna check out real quick, head home, and get ready for the next day. Thank you all for your support. Stay safe out there. Invest with confidence. Don't invest your life savings into a moonshot. Always do your research and never invest in anything you yourself don't understand. With that said, guys, thank you so much. I am going to check out. Have a wonderful evening.